Hey traders, welcome back to the channel. It is Tuesday, February 10th. Hope you had some nice trades today. So the one thing that I got to say before I start crunching the numbers today that's really obvious right off the top for me is that the disconnect between Wall Street optimism and Main Street reality is the narrative theme of the day, and it's been the narrative theme recently. Because the Dow is at all-time high records while retail sales actually flatline, and wages are posting their weakest growth in over 4 years. So a lot of times on the channel when I will talk about trading and I'm looking at charts and whatnot, I'll speak about divergences. And so a divergence is when you get one indicator that's going one direction and a different indicator is going a different direction. So it's like, two different stories being told at the same time. And divergences they're not super rare, but they're definitely more rare than when everything kind of moves in the same direction. So case in point being the SPY and the triple Q. Most of the time, the SPY and the triple Q move in the same direction. So if one of them's up for the day, the other one's also going to be up for the day. It's rare when you'll have a day when the SPY has a great day and the triple Q has a terrible day. So that would be a divergence. And divergence is what's been happening with the disconnect between Wall Street's optimism and Main Street's reality of the same picture. So it's just interesting. It's an interesting thing to pay attention to. So like I just said, we just wrapped up a session full of contradictions today. And if you're not paying attention to what happened today, you might be caught off guard by what's going to happen next or what's probably going to be coming next. So let's start with the headline number. The Dow Jones punched to yet another intraday record today, touching 50,398 before pulling back. It still ended up closing higher on the day, adding about 52 points to stay just above that historic 50,000 level. But here's where it gets interesting. The S&P 500 actually slipped about 0.3%, and the Nasdaq dropped roughly 0.6%. So the Dow is celebrating while the rest of the market is pulling back. That's a split personality that we'll need to pay attention to. Why the divergence? 2 words: retail sales. The Commerce Department finally released the December numbers, which were delayed because of the government shutdown, and they came in completely flat, 0% growth. Wall Street was expecting a 0.4% gain for the holiday shopping season, and instead consumers basically shut their wallets. Retail sales hit $735 billion, but showed no monthly growth whatsoever. Clothing was down 0.7%, furniture was down 0.9%, electronics slipped 0.4%. The American consumer, which is the engine of this entire economy, pumped the brakes right when everyone expected them to keep spending. And it actually goes deeper. The employment cost index came in at just 0.7% for Q4 of 2025, which is the slowest wage growth in over 4 years. So wages cooling plus spending stalling. That's the kind of 1-2 punch that gets the Fed's attention. And speaking of the Fed, Dallas Fed President Lori Logan said today that interest rates may not need further adjustment, but she also called inflation stubbornly high. Meanwhile, bond traders aren't listening. The 10-year Treasury yield dropped to around 4.16%, its lowest in about a month, as money poured into bonds. So markets are now pricing in at least 2 rate cuts this year, with growing odds of a third. On the earnings front, Spotify absolutely crushed it. The streaming giant reported EPS of 5.16, demolishing the 3.16 estimate. Revenue hit 5.27 billion. Monthly active users surged to 751 million, which is a record, and the stock rocketed up over 18%. That's the kind of earnings beat that reminds you execution still matters. But on the flip side, Coca-Cola posted mixed results with revenue of 11.82 billion, which missed the 12.03 billion estimate, and CVS lowered its full year cash flow guidance, sending shares down 3%. So anyway, here's what matters for tomorrow. January non-farm payrolls are going to drop, which were also delayed from the shutdown. Economists expect just 55,000 jobs added. So if that number disappoints like retail sales did today, rate cut expectations could explode higher, and that changes everything for how we trade the rest of the month. So that's it for today. Hope you had a good day. Make sure you stay sharp tomorrow because it's been wild. I'll see you tomorrow. Bye-bye, everybody.